Hello guys, welcome to i-tutor Academy. In today's session, we will continue with the Unit 16 of subsession 5, the MMBC 004, Application of Forensic Accounting. And this is the last unit of your MMBC 004. So you just revise, before videos from the chapter Unit 1 onwards. In between any doubts, you can contact us in any time. And this is the last chapter of MMBC 004. And maybe one more section for this unit because it's a lengthy unit, so we will cut part. It will more easy for you, that's why. And from next Monday onwards, most probably we will start the MBC 005. So let's start. And for detection and prevention is one of the principal area in which we find the application of forensic accounting. But the scope of forensic accounting has increased in recent years. Some of the specific practices areas of application for forensic accountings are: one is bankruptcy, insolvency, and recognition. The service of the forensic account can be availed by debtors, individual or organization contemplating bankruptcy or already in bankruptcy, and creditors, and computer forensic analysis. Nowadays, most of the transactions are done electronically, and information regarding these can be found in files stored on location beyond the computer infrastructure of the parties involved in the transaction. And the next is economic damage calculation. When two or more parties are involved in a transaction and the action or inaction of one of the parties causes loss or injury to the other party, damages arise. And family law, forensic accountants can have several roles in cases involving inheritance, will, Hindu undivided family, that is HUF, and martial dissolution, divorce, and past divorce. In case involving inheritance, will, and Hindu undivided family, the documentation is often not adequate, and the claim of individual are often entangled with the claims of other individuals. And financial statement misrepresentation, the statutory auditors examine the financial statement and determine whether the financial statement properly report the balance, results, and requires the disclosures. And fraud prevention, detection, and response, this area has the most prominent role for forensic account, and they design the accounting and control system to prevent fraud, investigate fraud that have occurred, and redesign the system with better controls and procedures to prevent reoccurrence of fraud in the same form or potentially any other form. And their services can be used to proactively evaluate internal control system, financial policies, and accounting procedures. And business valuation, services of forensic accounts are used to conduct business valuation in a number of contexts, and the valuation may be required when a partnership is famous dissolved, or one partner is leaving or buying the interest of the other partners. And type of fraud, the origin of the fraud can be either internal or external. Fraud perpetrated by employees and owners are referred to as internal fraud, whereas fraud committed by the outsider versus who are not employees or owners is referred to as external fraud. The fraud tree is here, so you just go through this fraud tree, and this is the one by one, and it will more clear. Okay, fraud tree. And cash misappropriation is the most common and consists of many ways, and fraud involves an intentional deception by the individuals, associations with the business in their capacity as employees, owners, vendors, customers, and anyone else related to the business or unrelated to the business in order to in appropriation to obtain money or services or any asset leading to financial loss to the business. And fraud origin and accounting cycle, in order to understand the genesis of fraud and how it is perpetuated, let us briefly discussing the five accounting cycle which are common to the manufacturing and trading business. These cycle are sales and collection or receipt cycle, and purchase and payment, that is disbursement, and personal and payroll, inventory and warehousing, monthly reconciliation and reporting. Sales collection or receipt cycle, sales and collections cycle consist of making sales and collection of sales proceeds either immediately in case of cash sale or after a period of some time depending upon the credit policy of the firm. theft of cash on hand. Employees steal the cash outrightly, and the employee uses the cash for his personal use for period of time and replace the same at the time of reconciliation or make good the shortfall through a fictitious book entry. And the theft of cash receipt can be done by skimming and larency. And skimming is the process by which cash is removed from the business before a formal entry of the cash is made in the accounting record. And this is an off book scheme before, because the cash receipt is neither reported nor entered in a book of account. Okay, the common skimming schemes are sales scheme, account receivable schemes, and refund and other schemes. Under the sales scheme, the sales are either unrecorded or understand. Okay, so these are the type of frauds. And purchase and payment cycle. This cycle start with the purchasing of goods and services required by the organization, and with the payments for these goods and services. Through this cycle, many can operate, resulting in fraud. An individual working with the purchasing department may perpetrate fraud by setting up a shell company to receive goods and misdirection from the company by false invoice. And personal and payroll cycle. This cycle start with the hiring of the employee, maintaining and terminating employees. The main activity involved in the personal and payroll cycle is determining salary and benefit amount, monitoring and approving employees expenses and reimbursement, and all other aspects relating to compensation of employee. The typical fraud schemes perpetrated in this cycle are payroll scheme, ghost employees commission scheme, workers compensation fraud, and falsified wages scheme, expenses reimbursement scheme. And ghost employees fraud occurs when non-existent employee or employees who have left the organization are added to the payroll, and their wages are received by another employee or group of employees who have clouded coded to perpetrate the fraud. Commission scheme are most likely committed by sales employees or employees whose remuneration is dependent on achieving certain target. To perpetuate this kind of fraud, the employee either manipulates the target to be achieved or give an impression of the target being achieved. Example also here. You just go through the material. And the next one is fraudulent financial reporting scheme. Over reporting and under reporting of revenue are two methods used by the business depending upon the motivation of the people running the business. Under reporting is generally resorted by sole proprietorship fame and partnership fame and private limited companies with a motive to evade taxes like GST and income tax. Overstatement of revenue may not strictly be treated as fraud, but it does distort a company's true financial performance in order to exhibit the desired result. And the following methods are used for overstating revenues: accelerating shipment, keeping books open in order to record sales often made at the end of the accounting period, and recognizations as sales which are not yet sale. Examples include consignment sale not yet sold to the end user, sale with a special condition, and swaps or round trip trades and related party transaction, and non adjustment in gross sales by understand of returns, discount and markdowns, and fictitious sales also. Revenue recognition detection techniques. Variety of techniques can be used to detect anomalies in the revenue recognition process, ranging from inquiry and analytical tests. Some of these techniques are here, so you just read out this from your IGNOU material. And next one is improper revenue recognition. Side agreements. Sales is often made on pre-agreed term and condition and formalized in terms of the agreement. Managers and executives may modify, revoke, or amend the terms of the sale and without proper authorization outside the recognized sales process or reporting channels. And the common modification include the purchase return right and extended credit period, and refund or exchange on return. This modification may impact revenue recognition. Wise, there is a probability of advance revenue recognition if there is purchase return. And round trip transaction is there. Round trip transaction may include two-way sales between two companies for the same amount within the short period of time, or it may involve a loan advance or investment in one entity so that the other entity can purchase goods from the company making loan or investment. Next is bill and hold, and the altering shipping documentation, and the agreement to sell through product in the scheme. And the sale agreement include contingent terms which are based on the future performance of the buyer. And to understand this, suppose company A sell to distributors B and C goods to the condition that B and C will make payment only when they have further sold the goods. And the upfront fees is there. Inventory schemes are here, and offsite or fictitious inventory is here. So you just go through one by one. And other financial reporting schemes are, one is refreshed receivable schemes, and promotional allowance manipulation scheme is there, and off balance sheet entities and liabilities are there, and improper asset valuation capitalization of expense is there. And next one is adding back outstanding check to cash is there. So these are uh, the schemes related to financial reporting scheme. So you just read out this portion. May questions may ask from this side. In between any doubt, you just contact us. For more videos, you just do like, share and subscribe our channel. Thank you so much.
i-tutor ES presents IGNOU MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 17885.